Ladies and gentlemen, welcome. This is Christopher Aaron, and this is the iGold Advisor channel. Today we had a Fed meeting, so we're going to be looking at the results of that, how it impacted the various metals as well as the broad markets. And we're also going to be looking at the potential for a breakout pattern that I'm observing here in silver, how that plays in with all the patterns that are developing across the broader markets. If you have just joined this channel, one of the things that I want to tell you is that you've probably arrived here because you already understand the fundamentals about precious metals. And I congratulate you on that. I understand the fundamentals too. That is what drives the markets over the long run. However, I focus on the price action because I want to stay updated as a private investor, as a trader, and as someone who advises clients. I want to stay updated on what is actually happening in the markets on a day-to-day and a week-to-week basis so that I can prepare myself, so that I can have a good sense on the direction of the markets, and so I can also make some money while I'm at it, because ultimately that's why we're in the markets, to either protect our wealth or to grow our wealth. So keep in mind those fundamental factors as we get into looking at the charts are always in play. I don't focus on them that much because I like to see what exactly happened in the day-to-day. So today we had the Fed announcement that they are going to leave interest rates the same from the last presentation, from the last rate hike, which was in mid-December. So just for context, if you're new to studying the Fed, understand this about the backdrop. The Federal Reserve is the central bank of the United States. It is a privately controlled organization that is owned by its member banks. And Congress has given it control of our national currency. So there is an inherent conflict of interest with the Federal Reserve. When caught between a rock and a hard place, they will do the hard thing, which is to print money to bail out their member institutions. Okay? That's what the organization should do. It's logical from their standpoint to support their own member banks. That would be fine. The only problem is, as citizens that have to own the currency, that have to save in that currency, our currency gets debased when they print money to bail out or to assist their own institutions. Now, we've had a period of 0% interest rates, primarily designed to support the banks, since the crash of 2008. Now, the way that the Fed keeps interest rates at 0% is to print enough money to artificially force the short-term yield curve down, the short end of the yield curve. So they force it all the way down to 0% by flooding the system with enough money, devaluing the value of the short-term bonds enough by buying those bonds with this newly printed money. So we are just rounding out of this bottom that the Fed has induced in the yield curve. And for example, looking at this today, the impact that this had on stocks, on gold, and on silver, very interesting. So the announcement was released at 2 p.m. and you can see that right here by this black line. And look at how the various major markets responded. Stocks crashing intraday by 300 points. Gold rising significantly. And silver basically ending up flat. This dotted line here shows you where the price was on the previous day. So fairly flat for silver. If you're a precious metals investor, one of the themes that I bring up often so that people are mentally, psychologically, and financially prepared is to know that silver can often lag gold and it can often fall when the stock market is falling. because still in this day, 80% of the silver market is consumed by industrial demand. And since a lot of the stock market is based on industrial demand, silver will often fall with it in the short run. So we can see silver came in just between rising gold and falling stocks today, kind of exactly where we should expect it to if we know that. Now, the thesis that I propose, and that I think a lot of you believe, is that in the long run, silver will be recognized as a monetary asset primarily, and its value will increase because of that. So we're watching for that shift. It hasn't happened yet, but when is the market, being the sum of all people participating, going to recognize silver as a store of value? Let's take a look. We're looking at the month and a half since the beginning of the rising interest rate cycle that we find ourselves in right now. Just that 0.25% rise that we saw by the Fed. And we're looking at major world assets. I bring this up maybe every other week or so we can keep a track of this. And we can see very clearly gold and silver right below it, basically outperforming for the last month and a half all other major asset classes. Long-term U.S. bonds greater than 20 years in duration, rising 4%, U.S. dollar rising just above 0.5%, and stocks and commodities as a whole falling significantly. So we are still in what I would have to define as a downtrend when we look at the precious metals, but that downtrend is showing signs of coming to an end. And we can see that playing out. Let's look at here the last 3 days. So today, here was that rise in green after the Fed meeting. We are looking at gold now on the 6-month time frame. Here's the key for all of my charts. All these colors stay the same. And we can see that we've been now in this short-term uptrend that is extending after the action today. And we can see that this looks to be accelerating. Gold is moving away even from this linear short-term trend line, at least here over the short run. So there's a potential that this could be the final low in gold. Now we look at some other facets of this market, the gold mining complex as recommended by the GDX fund. And we are looking at basically a market that is approaching this long-term downtrend. We've been looking at this for a number of months, and we are approaching another attempt to break out of this long-term downtrend. Now, this will be really significant when this happens, whether you choose to invest strictly in physical gold and silver, which is wonderful and which I do recommend as a long-term position, or whether you also choose to invest in select, strong companies that dig the gold and silver out of the ground. This is an important trend to be watching here. So let's back this out. This is the GDX fund, 6 months. We're going to back this out 2 years. This is why this is so important. Here we are right here shown by this red circle. And we're looking at over the course of the last 2 years, 1, 2, 3, 4, 5, and we're making the 6th attempt to break out of this downtrend shown by the royal blue. Now on the lower side of the downtrend shown by these orange circles, we have the lower trend line, and we can see that these two trend lines are converging. And when we have a converging set of trend lines like this at the end of a multi-year decline, this most usually represents a bottoming pattern. Based on my years of studying various markets focusing on precious metals, but looking at this pattern also in stocks, in other commodities, etc. So could this break out in the next day or two of this pattern? It could. I don't know that it's going to do that yet. There may be some more weakness, and perhaps we fall into the lower end of this pattern here before breaking out sometime in the middle of this year. But that breakout is coming, and that will be a very early indicator, a very good indicator for the early detection that the bottom of gold itself is in. Now, if there are any people who are interested in this aspect of the market, in looking at some of these companies, there are sometimes reasons to own these companies. If you own a sufficient amount of physical gold and silver, and you have a tolerance for higher risk and higher reward, there are years where fortunes can be made in these mining companies. This is not a recommendation to do that. And even if I was to recommend certain companies, it would not be for every individual. Certain people can't stand the risk factor of these companies. Certain people can. So I believe that I'm going to be starting a new series of videos for people who are interested in this aspect of the market over the course of the next several weeks to several months, because I personally do invest in these companies when the market tells me that the proper time has arrived, which I'm looking at being fairly imminent. Perhaps not this week or next week, but perhaps later on in the spring, we will reach the right time to make some very select investments that could result in a nice outperformance above and beyond the price of the metal. Looking back at the price of the metal, we're looking at gold over the 2-year time frame. And if you are strictly going to invest in the precious metals, which I do think is going to be a very good investment over the next 5 to 10 years, this is why that last slide was so important, because gold here is showing its own short-term uptrend. We're seeing the outperformance against the rest of the commodity sector down on the lower section of this chart. And we're still looking at this, though, as being in this primary blue downtrend. So essentially at this point, I don't have a target for gold at this moment, except to say that if the mining complex breaks out, it gives me a strong indication that we are in the process of putting in the final low here. And then I would expect that over the course of the next several weeks to several months, that will be confirmed by breaking out of this downtrend. That's how the series should go, according to most of the patterns that I've studied. Could something go differently? Absolutely. The markets are never 100%. No form of analysis is 100%. If anyone ever tells you that they know 100% of what's going to happen, you should raise your bullshit indicator and know that they are lying to you. So I bring to you what I believe to be the highest probabilities based on what I'm investing in and based on what people who come to me for my research are looking to invest in. We are switching over to the silver side. And we can see here that number of attempts over the last 2 or 3 days to break above this $14.50 level for an ounce of silver. So far hasn't done it. Looking now, we're going to switch this up, and first I want to look at the silver mining complex, and then we're going to look at silver from the 6 months, and I'll show you why. Excuse me. So we had this move down here in Silver Wheaton, which is typically one of the strongest silver mining companies in the entire sector. We had this move down below the summer lows, and I said a few videos ago there was a chance that this was because the company is anticipating lower silver prices, which still remains a valid possibility, or that they are having this fundamental issue which is being raised in the courts right now about some tax issues for Silver Wheaton. The other possibility is that this spike lower over the course of the last week and quick rebound, this being sort of a V-shaped bottom, was a final capitulation low in the stock of Silver Wheaton. So there are these three possibilities for this low. I don't know which one it is yet. I have to follow the signals until I have a more clear sense of what is to come. But I bring up these three possibilities because when we look at the silver side, let's switch over. We were looking at the price of silver consolidating for the last 10 weeks in this teal-colored dashed line converging consolidation. And on the very short term, we've broken above that. Okay, so you see that right here. Of course, this being the SLV fund. So we're looking at silver prices today right around $14.50 an ounce. We are looking at the price of the SLV fund being around $13.80. Just keep in mind those two numbers are correlated, even though those two numbers are not exactly the same on the y-axis. They are correlated as far as their representation of the pattern. So we're seeing that little breakout here, but then we had seen that weakness in Silver Wheaton. So here's where we are with this mixed series of signals. And so silver has moved right back up to this horizontal support and now resistance level shown in black. Okay, black shown right here on the key. So silver has gotten right back up to this level. And that's why it's stalling out, because you still have sellers existing around this level. You have people who bought right here a month and a half ago, and now that the price has gotten back to this level, they're afraid and they're selling. They want out. They don't believe in it for the long run. And that's okay. To each their own, right? That's what makes a market. But for those of us who are invested in silver in the long run, we just want to be aware why the price is stalling here, because you have a lot of sellers at this former support level, which is now resistance. So zooming this out to the 5-year trend line, here's this wedge-shaped bottom pattern I've shown a number of times. I'm going to zoom this in. Keep in mind, this is the flatness of the pattern that we're talking about. It's a very, very gently sloping decline at this point. Let's zoom this right in to just the last year, and we're looking at the same decline. Basically, the upper end of this line comes right here. And at today's prices, we are looking at the spot price of silver on this chart. So at today's prices, when silver breaks above this blue line, which is somewhere around the $15 level, in other words, 50 cents higher than the price is today, we are going to have a very strong indication that this market is getting ready to turn. I'm going to back this up. Okay, so that's going to be breaking out of this line right here. We're going to have a very strong indication that the market is getting ready to turn. And there are thousands and thousands of people watching this market to try to gauge when is the bottom in. And they are watching for this line to break. So just to move back again, it is not that far from where we are. Now, is there a possibility that this could bounce here back, that it does not break above 1450, or perhaps it doesn't break above this line right now and falls back even further? Yes, that's still a possibility. So until we have this line confirmed, at which point we can talk about what sort of patterns are going to emerge after that. There's a series of possibilities for how quickly, how far, and to what extent the silver market could move after this downtrend is broken. But until we get to that point, we must pay attention to this downtrend that's still in play. It's not that far away though. So this is going to get fairly interesting here over the next few weeks and few months. If we get this move down lower though, you may be thankful that you still have a bit of powder that you can buy some cheaper metal. I still say there's a 50% chance that that move lower may come. We'll know fairly shortly. Again, just showing that line right here where that break is going to come. The executive summary, just to rewind, gold is in a short-term uptrend until proven otherwise. We are getting closer to a major breakout in the mining complex, which should lead the price of gold to some extent. Silver, the line in the sand is $15. Should we not break that line in the sand, I maintain the possibility of a move down to $12. That's not a guarantee. That's a possibility based on the patterns that I'm observing. So, thank you for sticking with me. The next update will be on Sunday evening. It's wonderful to have everyone tuning in, and I really hope that this helps to provide some insight as to what goes on in my mind when I'm analyzing these markets, and hopefully it gives you a bit more of a sense of what we should expect over the days and weeks to come. Thank you. See you on Sunday.